Cannot wait to talk to Mark once again. Mark, welcome back to the show.
Oh, thank you so much. I appreciate it. Glad to be here. Love it.
There's so much that's happened, right? And, let's just start with, your book, the Tax and Legal Playbook. I know there's a lot of concepts inside of that book. Let's start with the entry level person. What are some real basic things that people can do or should be doing, or mistakes that you see for the first time investor?
You bet. Well, first of all, don't give up. The real estate game is a long-term game, and I want to attest to all of you that are listening, as I've helped over the last 25 years, thousands of real estate investors. Now, let me rephrase that. Thousands of wealthy small business owners. Let me tell you a common thread. I'm not kidding. 98% of them own rental real estate. It could be a single family home, a duplex, multi-unit, maybe in a syndication. Maybe it's raw land. It could be storage units. It could be commercial. Any wealthy people own real estate, but it's not a get rich quick scheme. And so as a tax advisor, I want to let you know, I see thousands of tax returns and I see what works. So the first thing is, don't give up, be patient. And it's the number one tax preferred asset on a tax return. I have so much to work with. And the number one principle would be just stick with it. So I that's number one.
What are some of the things that just the everyday person can do right now to actually keep more, because legally?
You bet. And let's use some of the new investors, Danille, that you're helping a lot of, kind of the buying my first rental. What rental should I buy? And it's really a lot of people overcomplicate it to try to sell things to their own advantage. And so I'd like to tell the new investor that let's keep the KISS principle. Let's keep it simple, stupid. We can go out and look for good rental property and start taking advantage of some of those basic tax strategies. For example, some people go, well, I don't know about a single family home rental or a duplex or something. I just don't know what to do. It seems so much. Well, I always ask, are you renting from someone else? You're always your first best renter. So if you are renting a storage unit or a warehouse, or have a small office, or could you convert to a commercial condo? Or do you have kids going to college? Could you be buying a rental property that your kids can rent from you? Where's your parents living? Could you buy the house from your parents, let them rent from you? That could be a good estate planning strategy for your parents. Cash in on the sale of home exemption. Now they're in a better position to apply for Medicaid and other things. And so if we can find property that we're already engaged with in some way in our small business, when we buy it, we get it in our simple legal entity. Now I'm tracking travel, dining, home office, computers, electronics, cell phones. I want all of my kids on my board of directors, board of advisors. I want my kids learning about that rental property, taking deductions for auto, and all the things that relate to that rental property. Tools at Home Depot, Apple Store, Best Buy start to be a write-off. Owning a rental property is owning a business. And a lot of people don't realize that. So I could go on and on, but just starting to track the little things, they add up, and then those write-offs can offset the cash flow. They're always going to offset the cash flow, and then maybe some other income as well. Sorry, it's a mouthful, but it's so exciting.
I think a lot of times people believe they're either an employee or a business owner, but the truth is you can be lots of things. You can be multiple businesses. You can be an employee and have multiple businesses. And a lot of those businesses can do lots of things to also offset your income, right? Can you talk about why and it's such a good idea to start a small business?
Yeah, well, with COVID, we saw the onslaught of another wave of the side hustle, the side gig. It's now estimated over 1 in 3 working Americans have a side hustle. It's almost 50%. We're pushing over 45% of wage income earners have another side hustle, but they don't realize it's a gateway drug to capitalism and building wealth and saving taxes. So let's have fun. Danille, tell me one of your favorite small businesses you started. Like, what's one of those that you're like, man, I knocked that one out of the park. What's the small business that you love? Was it a real estate deal? Was it retail? Was it online? What was something you liked?
My small business I started was a bartending company.
Oh, okay.
What
So
you
you'd hire
tell them?
bartenders and send them out, or you train bartenders?
Nope, I'd hire bartenders to send them to events.
Okay, I love it. Okay, so let's talk here, people. This is cool. I haven't looked at this. So let's think of all the write-offs that could go with that. Is that all right?
Yeah.
Okay, so I'm hiring bartenders. I'm getting them trained, make sure they have their license. And then I've got catering gigs, parties, events, and you got to send out bartenders. They need 3 or 4 bartenders. You send them out. Okay.
Yep.
Okay, love it. So now, folks, what are all the things that we would be writing off here? We'd be writing off all of the events Danille's going to, because she's got a network. She's got to get out there and do her job and find people that need bartenders. Every event she goes to is now a write-off. She's going to have to do some research, like she's going to be out having dinner. She's going to be trying different drinks at the bars. She's going to be networking with other restaurants. So all of her dining is now a write-off. And sometimes those expenses for the supplies, the equipment, the clothing, the uniforms, the travel, the auto, all of the dining and food that she might be spending becomes a write-off because it's part of building her business. I call these personal conversion expenses. I know this sounds religious, but it's actually they're expenses I was going to have anyway. I was going to go out to eat. I was going to go to that event, but now I'm networking with that restaurant. I mean, networking. So now that expense that I was going to have otherwise personally is now converted to business. So I'd love to go around here in my wallet right here. I've got 2 cards. I got my business card and my personal. Now, if I'm going to the grocery store, using the personal. If I'm out doing business, I'm using this. So I want you business owners and Danille, whenever she's going to do anything related to drinks and bartending, she's going to use a business card.
So Mark, I have a question. So when somebody owns a single member LLC and they're supposed to turn in minutes, how does one have minutes when you're a single owner?
I love it. Well,
Great question.
You still have your meeting. You take yourself out. You get something real nice. Usually a spa treatment's important because, you're the head cook and bottle washer. You're the manager, the member. But no, even my own S corporation, I have an annual meeting in my legal corporation that's part of a law firm and all that with myself. I have minutes. I say, yeah, this year went well. I hired someone. I fired someone. I did this. I did that. I distributed this. We expanded. And in fact, it's required. Even if it's by yourself, you have that meeting. Now, but we want to go next level, Danille, because it's never just going to be you. Every LLC we set up, even if it's a disregarded single member LLC, it has a board of advisors. A corporation has a board of directors. An LLC has a board of advisors. So who's on your board? Ken, the boys, and we're going to have a meeting. Oh, my mom. Hey, mom, your mom will fall over. She'll be like, hey, Mom, I need some advice. You've got so much sage wisdom. Could you please go out? Let's get our nails done. And I need some advice on my business. Board meeting, right off. We're going to have lunch. We're going to have drinks. But it brings the family together. We're getting good asset protection. We're getting tax write-offs, and we're creating family education, financial literacy. We're teaching them about business.
The Roth IRA is an entity that you set up and you do business in, and it grows tax-free, right?
Yes, sir. So everybody listening, let's hit some basics. I'll hit some just real quick. Just take 60 seconds. We're all familiar with a 401k at work. I put money in. It's withheld from my paycheck, and I don't pay tax on it. I get a tax deduction on the way in. I could go open an individual retirement account, an IRA. Go to Edward Jones or Smith Barney or Merrill Lynch, and TD Ameritrade app, and I can open an IRA. I get a tax deduction. It grows tax deferred. I can invest in a Tesla stock or buy ETFs or mutual funds, and I don't pay any tax until I pull it out someday. And we want to get that going. Now, a Roth IRA is a variation on the traditional IRA or 401k at work. And just last year, we got a new law that allows companies to match in Roth dollars. You can put Roth money in and company will match in Roth dollars. With a Roth, you don't get a deduction up front. You pay tax on that $5,000 or $6,000, but then you take and put it back into the IRA, a Roth IRA, and it grows tax free. It'll never pay tax again. And so this little mechanism is what the government is begging people to use instead of Social Security. Social Security is a need-based safety net for the poorest of the poor. We have got to take control of our own future. And when we build a Roth IRA, we can invest it in anything we want. So that's the basic there. I know we want to kind of unravel this. It's an incredible thing.
Well, I think the people need to understand there's a big difference between tax deferred and tax free.
Yeah.
And the Roth IRA is tax free.
Yeah. And let's do a little real estate example. You're going to love this one. And one of those entry level deals that you talk about by HSA. You can do this with your health savings account. I opened my first HSA up over 10 years ago and put in $5,000. You could put in 55 the next year, $6,000. Now it's up to 7,500 for a head of household or married couple. Health savings account. They work just like a Roth IRA, but better, because I get a tax deduction on the way in. I can invest it in whatever I want, and I can pull it out for healthcare tomorrow. Eyes, dental, copays, any surgery, prescription drugs. So I started my HSA 10 years ago, formed a little LLC. I bought this little rental property in my LLC owned by my HSA. I've had it for the last 8 years. Cash flows a couple hundred a month, paid for Molly, my youngest daughter's braces. So this rental property is creating cash flow inside my HSA, and I can sell it tax-free. And I had seller financing on it with $5,000 down, just this little $50,000 crappy little house. And it's in Elgin, Illinois, outside of Chicago. And it's been great. And I've got we've continued to buy real estate, and my partner and I are Roth IRAs. We've been teaching this for years. And you can buy real estate and get out of Wall Street and buy raw land, duplexes, rental properties, and it grows tax-free. It comes out tax-free. They're just incredible.
Yeah, that's a great segue into the self-directed discussion that I wanted to talk to you about. I know you talk a lot about this on your podcast and in your books. So when you put money away in whatever retirement vehicle, you could actually move it into what's called a self-directed plan, and then you can literally self-direct the investment, right? Can you walk people through that? Because I don't think people realize, you mentioned it with the HSA, which is essentially just taking something like that and self-directing it. But you can do this in most retirement accounts, right?
Oh yeah, absolutely. So let's say any of you out there have an IRA. It could have been something you've been putting money into, and it could be a Roth or a traditional IRA, or some of you might have an old 401k. You left a job, and when you left that job, they kicked out your 401k to an IRA, and then you went to a new job, and they may have a new 401k for you. But you've got this IRA languishing here. It could be a TD Ameritrade, Merrill Lynch, Smith Barney, Edward Jones, wherever. And you're lucky, and this is not to beat up Wall Street. They are what they are. You're lucky if you make 8%. And after all the fees buried in some of these 401ks, which Warren Buffett and even Tony Robbins, they call it just highway robbery. And legalized gambling is more likely what is Warren Buffett's called it recently. But we've got this 401k or IRA languishing in Wall Street. And you say, well, I got 40 grand sitting there. Well, there's a little rental property here for 100 grand. Now, I know you can add zeros to this. It could be 500 grand, 100 grand, whatever. The concept's the same. Step one, you take your IRA that's over here at this big bank in Wall Street, and you say, I want to transfer it or roll it over to a self-directed custodian or trust company. Now, our directed IRA, directedira.com, we're going to hit, we're at $1.7 billion in clients' retirement accounts. We'll hit $2 billion this year of people have taken their money and said, I want to redeploy it. I want to get it out of Wall Street. So at directedira.com, you can go on your phone, and just right now in the middle of the night or when you're not driving, and set up a Roth IRA, and I can transfer that IRA over to my Roth IRA. And now I've got a self-directed Roth. Now on day 3, they're going to call you up and go, well, what do you want to do with it? Where are you going to go with this 40 grand? Oh, I want to invest in my brother's landscaping business. I'm going to buy him another trailer. Oh, I'm going to buy into this restaurant down the street. Oh, I found this $100,000 rental. We have a list of banks that will do a non-recourse loan at 40% down, meaning your credit doesn't even matter. So you got 40 grand. You can get a $60,000 loan to buy a $100,000 property. So now I've leveraged my Roth with 40 grand to buy a $100,000 property. There's no tax on the transfer because you just rolled it from Merrill Lynch to a trust company that lets you buy what you want. So you roll it over, form your LLC, buy it. I mean, there's about 6 steps in this, but within a month, you have an LLC. You control the checkbook, a single member LLC owned by Roth, where your family gets together. The 4 of you get together and say, we're going to put 4 Roth IRAs in this LLC and go buy a $200,000 property. Okay. Now your Roth is invested in real assets and what the hell you know, and you're getting the benefit of inflation, protecting that asset, and growing it.
As always, wealth of information. Thanks for everything you do for our listeners, and good luck to you, man.
Well, thanks for having me. I love what you guys are doing. Keep up the good work, and it's just an honor to be a part of your community.